Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fine.
Oh dear. I don't have my camera on correctly here. Hold on. How are you guys? Oh, you know what? And we need the light. There we go. And we need the music. I am not hearing music. Hold on. Okay. Well, so interesting situation today. I suppose an interesting time for it to happen, given it being Black Friday, which is actually stuff happens on Black Friday, but more in the equities, right? But the CME was down. We are, what looks like we're back up. I'm getting data. Why is the spread wider on ES than NQ right now? Well, because NQ is always really thin. I am seeing a 1 point spread though. I don't know. Yeah, it is supposed to be tighter, but like, so like when you look at ES, right, there's usually like 300 contracts. Well, I guess it's more like 50 contracts of price, right? When you look at NQ, there's usually like 1, right? So if they reduce their liquidity in NQ, well, okay. So like if normally there's 5 contracts and they reduce their liquidity, maybe there's like 1. Whereas in ES, they like, instead of reducing the amount per spot, they put it further away. I'm not making any sense at all, am I? Let me try explaining this a different way. In the empirical literature, they split out behavior between large tick and thin tick instruments. Normally, they talk about stocks. The classic thick tick stock was Intel. I don't think it is anymore. I don't know what they would use now, but basically instruments that have a lot of liquidity versus thin tick instruments. And these tend to be more like the tech high flyers. They don't have a whole lot of liquidity. Okay. And the literature shows significantly different behavior between the thin tick and the thin and thick tick instruments. So if you are a market maker and you are reducing the amount of liquidity that you're putting out because you believe that there are risks to you at the moment, you're going to reduce it differently in the thin tick instrument than you do the thick tick instrument. And the way that you do that is in a thin tick instrument, you're going to have like orders everywhere. You're really going to have like orders at every price versus the thick tick instruments. A lot of those guys might only have liquidity at the first 2 prices. All right. Depends on the type of market maker and stuff, but you know, that's why you kind of see this thing, especially in ZN, where there's a lot less liquidity right adjacent to it, right? Versus something really thin. Well, I don't really have a good example of anything thin right now. Oil. We need to switch oil. Oil's supposed to be on January, so let's move that. Oh, looks like we have to go find it. Yeah, I'm streaming. I really questioned whether I was going to do it because oftentimes I don't on Black Friday. I have on Black Friday, but usually I don't. But I've been kind of sick. Man, after the stream on Wednesday, like I was fine on during the stream, right? But then after the stream, I completely lost my voice. Like once I stopped talking, it's completely gone. I'm doing a lot better this morning, but I think I'm still draining a little bit. So, and I can't flush as hard as I get because my nose is bleeding. I've been blowing my nose so hard, my nose is bleeding. Hopefully, as we go along here, it'll clear up. Let's see here. We need NYMEX. I enjoyed your chat, even though you're a hater. Totally. Totally. There we go. Okay. So like in CLH, right? There's only like one contract at each price. Like it's hyper thin. Right? So as a market maker, you kind of have your stuff spread out a lot anyways. Yeah. So if you reduce your liquidity, yeah, you might reduce it. You might cancel your order over here, but that's not going to be enough. And so you're going to cancel over a wide amount. And so that could lead to a situation where when the liquidity disappears in the thick instrument, like there is more of a gap than, or at least an increase in the gap than there is in the thin tick instruments. And this is what I saw very much happened when we had like the quant crash in 2018. Was it 2018? I don't remember. Saw the same CME pooped out, was planning on just taking a break from the terminal today and figured that was a good, yeah. Well, when I got in the shower and I started reading, I was like, today's probably not a good day to stream at all, is it? But I was already up, so good day to digest food. Well, it is a good day to go shopping too. The wife is planning on going shopping. Don't miss anything. Hopefully, I don't. All right. That's a good idea. You go ahead. Go back to sleep. Well done, because like well, man, my throat really tickles and feels dry at the moment. Maybe I need to try blowing my nose a little bit. I'm afraid of like getting a bloody nose on camera. Plus, this is kind of interesting, so I'm gonna watch this. You can't go back to sleep. Oil. You were talking about oil earlier. So one time, I had my wife try trading. I didn't give her any instructions. I just told her how to submit orders, and that was it. And she traded oil. And she made $1,000. She's like, yeah, I just bought it when it got to the lower end of the range and sold it when it got to the top end of the range. She made $1,000. Range trading in oil. Just one contract. Just one contract in oil. Can you believe that? Couldn't believe it. It was so flabbergasted. Especially like the thing that I was like so surprised at was also the strategy that she was using, because like oil definitely has that Jekyll and Hyde kind of behavior. Like you get good trends in it because the supply and demand in an oil market is relatively inelastic. That means that like a change in the supply and demand actually has a bigger impact on price. So when like OPEC comes in and changes something, it moves big time. Right? But if there's not anything going on, it is very, very mean reverting. And that she just happened to catch that. How long was the trade? Well, she traded for like 2 hours, I think. But she took multiple scalps. That was the thing. Maybe I just need to drink more water. But we're gonna try blowing our nose first. So it was really curious to me that the robot that always puts a big, thick bidder offer on the end of the range is still there, even though all of the other liquidity is practically gone. I think what has happened, like normally you would have lighter liquidity on Black Friday, but they must have decided since the CME was down, like, or maybe some of the robots couldn't start up. Maybe they crapped out and they turned them off. Which bot? I don't know, but there's always a big one there. It's almost always there, both at the high-low and last swing. And it doesn't seem to affect the behavior there at all, from what I can tell, but it's always been there. Man, when I woke up this morning and I got in the shower, because I didn't really have to, like, man, sometimes I'll blow my nose and the stuff that comes out, I'm just like, how is that back there? Like, just huge, dry, really gross stuff. This morning, didn't really get that. So I thought, oh yeah, my voice should be pretty good today. But it's not. And I would have liked to have recorded today, tomorrow. I got the script for the next video, I think, is pretty well ironed out. But no, maybe Monday. You trade Apex? Well, there you go. I'm just telling you, man. I have seen it so many times. Like, it's a recurring thing. Once a quarter, somebody will come along and I'll tell them, well, the results that you're getting are probably actually mostly random. They don't believe me, and then they blow up. It reminds me, I saw this thing, Thomas. So there's this kid. I think he's going to like Cornell or something like that. Anyways, he's in school for quant stuff, and his dad was a trader. And so he got on and he started pushing really, really hard against the ICT stuff. And which I always did, but I didn't make a ton of TikTok content about it. Whenever I tried to bait the ICT traders, they just ignored me on TikTok, at least. And he had a lot of success with it. Delta Trend trading on TikTok. So I love that kid. I'm so happy. I want him to become a big creator and keep going. He has a YouTube now. He's doing a few YouTube videos. I hope he gets deeper into it, because he was able to do what I've had such a hard time doing. And he was saying yesterday that he had a robot that passed Combine. And he said, well, there's things that aren't really useful trading strategies, but if you're on the combines, they kind of work because of the loss limits and stuff. And I'm wondering what he was doing. Was he doing something that really, really had a fat tail? Or was he like doing a spread? Because if he was doing a spread sort of a thing, my understanding is that when you like apply for a payout, they deny it. Passing's pretty easy. Yeah, but did you know that you have a 1 in 3 chance of passing? I wonder if you can, compile that information. Like how many accounts have you ever had versus how many you passed the combine and how many you got payout on? Right? You should be, I mean, it can't be that many. You probably get a payout, right? Or sorry, you can probably count them. What did I say? You probably get a payout. That's so weird. I think what's going on is the swelling has gone down, but I'm still getting like clear mucus coming out. I have records. I have 5K in and 10K out. That doesn't really answer that question. So there was something that I remember I was having a discussion with this one guy, and he was kind of bragging about how many accounts he's gotten paid out on. And I'm like, if you're really that good at trading, shouldn't you only ever need one? Like shouldn't you only ever need one? I don't get it. Yeah, they blow when you hit break even. Well, and I'm not saying don't copy, but I'm saying you shouldn't have a situation where you blow the paid account and start a new one. Because I see people, they'll get the account, they'll get some payouts, and then they'll blow that account, and then they start over again. And overall, you've taken payouts, so I guess you've made money. But in my mind, you blew the account. Like, nah, it's because of. Why do they make it so that the larger accounts are like a way worse value? Isn't that weird? Like the amount of extra leverage that you get for having the bigger accounts. Every time I've tried going and calculating that sort of stuff, it never made sense. And I'm just like, why do they do? They really like, there's just a bunch of people that don't check. I don't. What you can, well, because it's not really a 50K account. Like, where are they getting the 50K number from? If only for marketing purposes. And then, like, one of the things that really drives me crazy is like, if you trade a less volatile instrument or an instrument with lower margin requirements, they don't adjust it for that, right? They still say that you can trade X number of contracts. And it's not really They might have categories of instruments, but why don't they just have it as you have a real 50K account and you can use up to 50K in the margin? I don't, you know? Or then there's the other one. Oh, you know what? I was getting some emails the other day and I didn't do research. I really don't feel like doing it right now. I have like a big spreadsheet with all of the prop firms and their rules. Because the other thing that really bothers me is that you're not actually live trading. You know? Like, okay, on the Combine I get it's sim. But then when you're a funded trader, isn't the whole point? Isn't the whole point of having an evaluation so that you can evaluate people to decide whether or not they can trade your money live? So if you pass the evaluation, you should get to trade live. And there are some prop firms that you never trade live. They will give you payouts on a sim account, but you never trade live. And there's a lot of people that take that option because they don't want to pay the $50 a month professional fee or whatever it is, right? That to me is so crazy. So crazy. Like, at that point, how is it different from a bucket shop? Like, I think the only thing different there from a bucket shop is on a bucket shop, you could potentially owe the bucket shop money. But that's not why they banned bucket shops. They banned bucket shops because there was a fundamental conflict of interest between the client and the customer, and between the client and the customer, between the firm and the customer. So they got rid of so they made them illegal. And it seems to me that these funded trader accounts are really breaking the spirit of the law. They're breaking the spirit of the law. And that's when you realize that Congress does not have the balls to protect the consumer to the same degree that it did in 1940, 1950. Isn't that crazy? Doesn't that just kind of leave a nasty taste in your mouth for realizing that? It makes you wonder about a whole bunch of other things that the PDT rule is BSMX people. Well, but they're changing that. They're going to change it so that you only need like $1,000 in your account to get around the PDT rule. Okay. Actually, you know, if you were trading stocks and you only had 1,000 in your account, probably wouldn't change much for people because, you know, it can still take several days to clear. So, I don't know. And then there's the wash trading rule. I don't know. Part of me thinks, oh man, that's really going to hurt the future space. There's not going to be as many retail traders trading futures. But then another part of me is like, yeah, but They're not going to do this stuff on the taxes to get around wash trading rule. It still takes time for the funds to clear. Things like that. Maybe it wouldn't really change the number of retail stock traders out there. And the people that are trading futures, like, I think that by my definition of trading futures, the number of people actually live trading futures has maybe gone down. Has maybe gone down because they're all actually doing prop firm accounts, which don't count because those orders aren't going to the market. You know? That's weird to think about. On the other hand, I think there's some good edge available in stocks using order flow, so I don't want to do that. I wonder how much liquidity is in the prop firms. It's probably not a ton, but who knows? Like I said, from my Monte Carlo simulations, you have a 1 in 3 chance of passing the combines. So, like, when I get these people, they're like, yeah, I passed the combine. I'm like, well, yeah, but you might have just been lucky. Or you probably were just lucky. Now, if you've done 50 combines and you've passed more than a third of them, or let's say you've done 50 combines and you got payouts on more than 25 of those, then maybe you got something. But even then, you would have to say, like, 5 years. You know, how did you do over 5 years? See, if you were trading for 5 years and you're trading your own account and you could provide the data for that 5-year time period, we could probably start a commodities trading pool off of that. Absolutely. You get your Series 3 license and start a pool. But I've literally never come across a retail trader doing that. All the people that I've ever seen doing pools were doing momentum portfolios. Yeah. As the other thing is, like, who's actually suitable for retail day trading? Kind of like nobody. Because you have to be really dedicated to it. And if you were really dedicated to it, why wouldn't you go to an Ivy League school and get hired by a big prop or by a big bank? Or, you know, like, the people that end up retail trading screwed up somewhere. You did not. You fell off the golden path. If you fall off the golden path, they don't want you. Ivy League schools totally. Well, okay, so there are some other schools that specialize in it, but harder path. But either way, you would still go to school in finance and get a job at a bank. Like, the people that actually know what they're doing shouldn't be talking to us. Shouldn't be allowed to talk to us because they're at a bank. And then, if you're at a bank, they would tell you, well, yeah, we don't do that. We don't do that, because to them, those things are crazy. when I remember talking to traders at the bank, and they said that well, I was talking about like what's the edge that you get, like how do you get edge, and a lot of their edge just comes from the firm, like because to them they were a block trader, so they're not deciding whether to buy or sell. Somebody else is buying or selling, and they just have to execute it for a better price than what they quoted them. So their edge is structural to the market, basically, right? And they said that every once in a while there will be a guy that they do well, and so they'll decide to go off and try and do it on their own. But they only knew one person that had been successful with it after leaving the firm. Isn't that wild? And they didn't know how they were doing it. But I remember them telling me like, well, maybe you could do it as a retail trader, especially in ES, because I was doing ES at the time. They're like, if you really want to do ES, it's hard, but if you're doing this, you just have to really pick your spots, right? Like only trade when something big has happened and you know that it's really, really going to go, right? That's what they said. And they told me at the time, like, well, the market's really competitive, so like it arbitrages away statistical inefficiencies really, really well, but information it doesn't. Like they literally taught me everything about market microstructure, like the takeaways, but because I didn't know why they were saying that, and I didn't have enough context because I hadn't really been actively trading retail, I was just doing stuff on a spreadsheet, so it just did not sink in. Right? They even gave me, I remember them giving me the paper for the optimal execution of large portfolio transactions by Almgren and Chris. And I remember reading it and being like, oh, okay, I don't get what the big deal here is. It's just none of it made sense to me at all. And then I come and I read this book once I had all the context, and I'm like, oh, I'm so stupid. Like I knew it the whole time, but because I didn't know why and it didn't fit in the context, I wasn't doing the right thing. There's a lot of people, well, most people in finance end up going to the back office anyways. One of the things that I found at the bank was, because I was always trying to network with other people because I wanted to leverage my way into a trading position at some point. I think if that's really, really, truly what I wanted to do, I should have moved to New York. And maybe if I had moved to New York, maybe there's a scenario where it would have happened. But I found that telling people about it didn't always help you, because a lot of people would kind of resented you if you enjoyed it, what you were doing. Like, to them, they got into this for the money. They got into this to work for one of the best companies in the world. And they don't find the subject stimulating in the least. So if you are really fascinated by it all, they kind of resent you. Right? I'm sure that of the floor traders it was probably different, but but that's another thing. Like, I think a lot of what's going on in the retail trading world is that we are chasing a dream that was destroyed I was debating there a bit between whether I should say that doesn't exist anymore or that was destroyed. The media that we saw as kids, the things that would maybe inspire you or tell you that, you know, when you got older, that maybe day trading is a viable thing that I would be interested in going and doing, was almost entirely based off of floor traders in the 80s, which got destroyed when we moved over to electronic markets, and early 90s, early 2000s scalpers when the electronic markets first got popular. And they were relying on methods that the robots have basically taken over. So the traders that inspired us, those strategies are like literally not viable anymore. Now what's inspiring people? The whole GameStop incident. Well, is that like really a viable thing? No, but people made money in the short term. And options traders, I guess. But I kind of feel like that some of the craziest stuff in the options is kind of past now too. So I think if you're really involved and you're paying attention, that you might find opportunities, new markets, new technologies, things like that, where you might be able to find an edge for a short time. But by and large, the thing that most retail traders are trying to do is like just not viable anymore. And that's really what's going on is retail traders are trying to duplicate the success of past traders on things that don't work anymore. Like there's some studies on classical technical analysis signals. And when they did tests of these, there's one study in particular that's particularly famous because it was just, they did a lot of them. It was very comprehensive. And they found that historically it did work, but then it stopped working between the 50s and the 70s. So basically when the computers came along, people started trading it, arbitrage out of the market stopped working. You've been back. If you have a back test over 5 to 10 years. Yeah. Like going on a, like pulling up a past chart and like pretending to scalp on it and saying what you would have done is not backtesting. Okay. Don't call it that, please. There's a, if it doesn't involve writing code, don't call it a backtest, please. Scalp ATR on anything? Wait, do you literally mean scalping average true range? What's Mark Mitchell of Rasmussen Reports talking about here? Oh, the target is 0.7 times, 0.75 times ATR. Daily ATR? You get 0.75 daily ATR, that's impressive. 1 minute. Well, okay. That would be an okay way of determining your stop and target. I've actually tried doing that. Like some of my algorithms, you know, set the stop and target based on the ATR, but it didn't help. It's almost always the case. Let me tell you, it's super bizarre. The best entry exit is stop and reverse, almost without question. So you have a signal, the signal that tells you to get in, you wait for the opposite signal, you get out and reverse. So stop and reverse. And on almost every metric, like not only will you get a better like overall profit that way, but like your like your risk adjusted measures are better and all of that sort of a thing. It's just that your drawdown will probably be bigger too, and the drawdown is usually much larger than a retail trader account. But it's always just this bizarre thing in backtesting, like not having a stop and target almost always performs better. Mark Mitchell over Matt Rasmussen reports as saying, so basically innovation-driven wealth mobility is scarce globally. It should be hoarded by our nation like a natural resource. But what I can't find what he's referring to, where that's coming from, what shows that that is true. I feel like, okay, we've got AI now. So the AI really, it's not perfect by any means, but if you are trying to start something out, it makes your ability to achieve those things much better. Absolutely. So then where are all of these entrepreneurs making money from businesses they started with ChatGPT's help? I'm not seeing them. Shouldn't they be all over TikTok saying, well, I built this, 5 million a year revenue business, and here are the prompts that I used to help me? I don't really. I hear people say use this prompt and use that prompt, but never one that's like, well, I did a specific business and here are the tips to prompt it more effectively. Like, I've just never seen that. Even though I would say that it's objectively useful. So why is that? Well, I don't know. It feels to me like when I was a kid, at the early days of the internet, I had a billion ideas about what I could do on the internet to try and make money. And didn't really have the ability and certainly not the willpower to accomplish them. And now that I'm older and I maybe have those things, I don't really have the good ideas. Like, really, I've been kind of chasing the things that just based on what we've got now, I think are like my best opportunities. But they're not necessarily like super great business ideas. Yeah, you lose imagination as you get older. I think that's true. But then at the same time, it seems like everybody's running out of ideas. So it kind of feels to me like the business climate has fundamentally changed now that the internet has become developed. You say long ES? Well. Oh, by the way, I haven't heard. I should double check here if I have my new squawk on. I probably don't. Yeah, I don't. Because there are like reports that come out on the equities. Like, yeah, losing imagination or wise enough to see the things you would have ignored when you were. Well, that's definitely a thing too. So, one thing that you'll hear a lot in the startup world is like when you're pitching to investors, should you require them to sign an NDA? And a lot of investors see being required to sign an NDA as a big red flag, because if you need to keep the business idea secret, that means that anybody can do it. And if anybody can do it, maybe you get your business up and going. That's not going to stop somebody else from seeing the business and deciding to do the same thing afterwards anyways, right? So you would prefer to have a business that even if everybody knows that you're trying to do it, they're not going to try and beat you because they know that they can't do it as well as you. You need to have a moat, some advantage that is difficult for other people to reproduce. And in today's world, for a brand new business, what can you possibly have as a moat? It's hard. And the most common moat that I hear talked about now is distribution. If you have a way of getting in front of the customers, like you have a social media account and you're already popular, that can potentially be your moat. But other than that, what moats are there? There's not many. And so that's another thing that seems to really be cooling startups right now. So I'm just kind of looking out the corner of my eye, noticing that the Japanese yen has been doing some weird things this morning. And so I might want to keep an eye on that. The treasuries are still within a good range. And the E-minis seem to be taking off. They're not quite to where they were from when the CME opened back up. Man, gold and copper are really jumping, though. Anyways, on Black Friday, we do get reports, because there's reports about, like, initial sales and things like that. So, man, I can't handle it, man. I really don't see a good reason to trade right now, and they make me a little nervous. You're trading right now. Oh man, I have so many tabs open here that I need to get rid of. Oh, Michael Burry, happy Thanksgiving. When I take a trade on you, guys, my mentor would always, he said that NQ is the widow maker. Or the divorce maker. I need something with like vitamin. I need like a nice lemonade or something. Well, it's not even just liquidity though. It's like where is it that you're going to be finding a real edge in there? You know? Because the whole issue is if you're just noise trading, you can actually have some success with noise trading for a certain amount, right? And it fool you into thinking that you're good trading. So when you're trading in situations where informational edge is like practically non-existent, that's my immediate thought is, well, they're a noise trader. Man, ES is kind of turning back around kind of hard now, isn't it? like the speed with which this is going seems a little bit more than just noise trading to me. Not that I'm gonna touch it, but this is definitely going a little bit faster than I expected in this situation. I'm just frustrated because my mouth, it just feels like so dry, even though I keep drinking water. Probably the Thanksgiving salt. Well, like the big question these days, I think, is that we had a pretty big market decline. By the way, Nvidia is still down from those highs considerably. But last week we recovered pretty well. But I say that there was a sentiment shift. Something shifted. People are looking at the AI market differently from here. The sentiment has shifted. So can they continue to rally? I say no. That doesn't mean that I believe that we're going to have a deeper pullback. Just means that it's probably going to be more sideways action. At least until March, I think. But there's this kind of inkling in the back of my head that says, well, but it could just turn outright bearish too. Could just turn outright bearish. So coming in and seeing the S&P 500 starting to sell like that kind of has me a little bit like, well, it looks like it's stabilized. Still, it's a little odd. This is a little odd. What the hell? Here's a crazy post on LinkedIn. I hired somebody new to start on the first Tuesday of the month. They arrived at 8:45 on the first Tuesday of the month. They walked into my office and put their hand for me to shake. It's bad news, I said. I sent them home and told them this job wasn't right for them. When hiring people, you want people that aren't afraid to start the job early. Was he early to work? Yes. Could he have come in on the Monday? Yes. Don't just do what's asked of you. Do what's asked. Do what you ask of yourself. So he fired him because he told them to start on Tuesday and the guy didn't come in on Monday or ask to start on Monday. That is so unhinged, crazy. Like, this must be clickbait. This can't be real. Things that didn't happen for 500. This must be satire, right? Like, it has to be. I just can't believe that that's a real post. I wonder if you could sue them. Like, if you turned down other job offers and they fired you for coming in on a Tuesday when they told you to start, I think you absolutely could sue them. Yeah, it does seem fake. It does seem fake. Holy crap. Here's a guy. I may be stuck, and the reason I have a senior level job is pure luck. I've been job hunting for the past couple of months, and it's been really soul crushing. I am currently employed as a senior software engineer at what is most probably one of the largest corporates in my country of residence. The reason for me job hunting? Return to office killed my work-life balance. I have a 4-hour commute. What? That's bonkers. Why am I crushed? A calculator app. Not my first, probably not my last. Design a simple calculator app. Has the base functionality of Windows calculator. That actually seems like too crazy of an assignment to give somebody for an interview. But I think I could do it. Sounds like a Mumbai employee. Yeah, probably. That's crazy. His story is there's still crazy things in that story. Man, 4 hours, that would suck, man. How could you do that? I'm looking at a 1-hour commute. If most of the jobs here in tech jobs here in Utah are down in Provo Valley, and I'm at the northern end of the Salt Lake Valley, so it's like an hour drive. But I probably know no way around it. And I want to move, and every time I talk about moving, everybody shoots it down immediately. None of them want to move. Oh man, thinking about it just kind of makes me like, makes me irritated, because like they don't want to move, but I'm sitting here and I'm like, okay, it's not like you have good friends over at your house every day. In fact, almost everything that I hear about socially is complaining about other people. So like, what is it that's here that you want to keep so bad? You're just really what it is they're just that averse to change, and that's what it is. I married somebody that is not even remotely close to where I am on my how well I accept change. I'm somebody that it requires a certain amount of change to be happy, and they don't want anything to ever change ever. Like if you cook dinner and it's slightly different, nobody eats it. So that's right. They're all super picky, right? But I think I think 1 hour commute is stretching it even. Yeah. There's a problem. But I think, the thing is if I tried to move right now, I could do it. But that would be such a hit to income. That would probably be like $2,000 extra a month in mortgage to have to move houses. Right? Doesn't really make sense with interest rates and everything. But if everything normalized, maybe I could get to the point where I could show them the house that we'd be moving to, and it would be so much of an improvement that they wouldn't be able to turn it down, And get a house with a large pantry and closets. Because the closets in the master bedroom closet and the pantry aren't big enough for us. That alone would maybe make them want to move. Ooh, I didn't notice, but oil is kind of taking off here. I don't know. Before I was doing basically a 1 hour commute with the contracting job that I did, and it wasn't actually that bad. The only downside was, I couldn't start my workout until like 6. Whereas I would work out at like 5. But I think I can deal with that. What I need to do is I need to get a new day job, and I got to finish making that stupid cabinet in my garage. Get a nice painter and paint the stupid cabinet so that the garage is more cleaned out. And then the boys will want to play in the garage while we work out, and I can get it to where we're working out with my wife again, which is kind of how the beginning of our relationship went. And I think that we'll all be much happier then. I think they seem to be old enough now that it's not, I'm not like completely chasing them around every second. Like I just need to be there. They can do their thing. Slow right now. Yeah. Well, so I think it's at noon. Let me see here. Maybe my financial juice lists it. No. You get early market close. By the way, the volatility, the implied volatility for today is 4.88. That's super low for the treasury market. That's super low. Yeah. It also looks like that the regular session open and the extended session open were the same price. How's that? That crazy, huh? Uh-oh. Oh, no, we banned him. I was looking at my login. I saw somebody trying to impersonate me, but they immediately got banned. So I don't think I want to dive too much into the politics here today, but I just want to note that the shooting, was it yesterday or the day before, that killed 2 National Guard members? Like, you're not really seeing much about it on Reddit or news media, but right-wing forums are losing their minds. They are absolutely obsessed with this story. The irony is he came on some alliance program or something. Yeah, I am. It kind of seems doubtful to me that it was Islamic extremism terrorism. I think it's more likely that it's, you know, Democrat lefty doesn't like the National Guard being in DC extremism. Because he was a refugee from Afghanistan. Yeah. Like if you go over to the Donald, like well, I mean, I don't think we really know, but I'm just guessing. But he was from Afghanistan and he was a refugee and everything. So it seems to me like he was a person that liked America, and you know, it'd be kind of weird to just attack a service member, be an Islamic extremist. This doesn't make sense, but we'll see. It might be one of those things where they just never tell us what happens. Right? Just like with the shooter that attempted to assassinate Trump, we found out, was it last week, that this kid had many social media accounts who had been basically talking about assassinating people for some time, and law enforcement hid that, basically didn't tell anybody about it. But man, you go over to like patriots.win and it's like every post is about it. It's crazy. It's crazy. They are hyper focused on it right now. Yeah, there was all sorts of people who knew him and talked about it, reported him, and they were literally ignored. Yes. Really, it really is. But I mean, that's kind of the thing, is like, if every person online, I mean, this is the really messed up thing about it, is if we took seriously every person online that says they want to assassinate the president, I don't have resources to do that. Right? Like it's become such a common, especially in left-wing circles, it's become such a common thing to threaten violence like that idly. That, how seriously can law enforcement really take things like that? And then, like they investigate them and everything. They haven't done anything. What are they going to do? How are they going to know that he's about to do something? I don't know. Wow. Tokyo High Court decision endorsed Japanese government ban on same-sex marriage. That's pretty wild. Yeah, they're not saying anything too interesting today, though. Ugh. So there's this local story where a man took his kids on a hike, and it was actually like a really long hike, and like he had 3-year-olds and they were like not making it, and then it was raining and it was nighttime, and oh my gosh, the whole thing is suspicious AF. Kind of makes me wonder if he was trying to kill them. And the locals in Utah, they read this, like the comments are so unhinged. Like people are so upset about this story. Yeah, so what happened was eventually they built a makeshift shelter. And the kids were found in the shelter, like with one sleeping on top of the other and appearing to not be breathing. And The older kids said that they performed CPR on them. So that's like, what? And the father, I guess, left and was going to get help. But they didn't find the kids because he found people and got the help. They found the kids because people knew that they were out hiking and they didn't come back. So they reported it, and then rescuers went and found them. So that's why some people, they did severely injured, and apparently the dad was found separate from the kids. He continued the hike up. Oh, yeah, no, that's right. He did continue the hike up. But I don't know. Anyways, it's just crazy, right? No, I there was this whole thing about continuing the hike up, but I think that he actually did go to try and find help, or he claims. But it does kind of make, because, oh man, well, let me just find the story. I'll read it to you. Now that we're like, up to here in it already, I'll just read the story. Oh, I thought that it would be like the top story on my local news, but apparently not. The father was charged. Oh, that's a YouTube video. I don't want to show a YouTube video. Father, who was rescued along with his 3 children from Big Cottonwood Canyon in October after they were caught in a winter storm while hiking, is now facing felony charges accusing him of child torture. Oh, it was back in October? Investigators said he made his children continue with that dangerous hike even though they were not experienced, were not properly equipped, and the weather conditions had dramatically changed. Micah Smith of South Jordan was charged Wednesday in 3rd District Court with 3 counts of child torture and 3 counts of aggravated child abuse, all first-degree felonies. What seemed like an innocent hike with his 3 children quickly turned into a nightmare when the defendant chose to summit a mountain over the safety of the kids. The defendant refused to turn around when their mom told him to turn around and get the children home, charging documents state. During the 24-hour ordeal, the victims expressed that they were cold, tired, and wanted to go home. The defendant, who was supposed to be the protector of his children, was ill-prepared and extremely selfish. I don't think, like, the way that they're saying it is like, this guy was just really irresponsible. But when you read into it, it's like, it seems really suspicious. When search and rescue crews found Smith, they noted that Smith was behaving oddly and did not appear to be concerned about the children. Smith also told search and rescue team members that one of his children was dead, according to the charges. The 4-year-old boy was mostly exposed, unconscious, and appeared lifeless and had no pulse, and his body temperature was 62 degrees Fahrenheit when he was found. The charges state, while being transported to a local hospital, the boy received about 25 minutes of CPR at the hospital. He suffered a stroke, which required a portion of his skull to be removed and an external ventricular drain to be placed. Smith's daughter told investigators that when storm clouds started rolling in that day, he tried to convince her father to go home, but he refused. Yeah, if it's going to rain like that and it's cold, you just go home, man. Are you kidding me? This is a once-in-a-lifetime thing? No, it's not. You can go next week. Yeah, the guy is a monster. There's no recovery from this one. Yeah, like the thing that's crazy about it to me is like, I'm totally the type of person that's like, I will very much push my kids and encourage them to do a hard thing that they don't think that they can do. But this is crazy. Are you kidding me? This is crazy. This is like you're going to get killed. The girl said she again expressed to Smith that they should really go and that she was really getting scared, but her father told her, "You shall not pass." And then the storm came in really quickly and described that it was snowing, hailing, and raining. She said she was worried about not living, but Smith told her that they were okay according to the charging documents. Yeah. And if you are like, it's snowing and you're on a several hour hike and you are not dressed for it, that will kill you. That can kill you. I could see somebody like a teenager not understanding the danger of it. But a 35-year-old man, are you kidding me? I'm only saying this because, like, I'm sure at some point in my life I'll do something stupid. But this really seems like more than just him being stupid, you know? At one point during the night, Smith taught his daughter how to give CPR to her brother, the charges say. The other boy fell and hit his head while they were hiking down the mountain and became unconscious, unresponsive, and not breathing during the night, Smith told investigators when questioned. Smith admitted that he did not check the trail reports or the weather prior to heading out for a hike. He also said he considered turning around due to the weather when they were close to the peak, but wanted to finish the hike before turning around. Smith said he sent photos of the sky to his wife as the storm developed, and she also suggested they start hiking down the mountain, the charges state. In the search of Smith's home revealed a video in which one child is heard asking, "Are we going to freeze to death, Daddy?" Smith responded that we are almost to the top. In another video, Smith told the children that the path they would take was not the normal one and that they are taking a path less traveled, and then explained that the path will be hard and it is not easy. I'm wondering, this is a slightly different story than the one that I was reading. I want to see if I can find the comment from him. Experienced hikers from search and rescue themselves were injured in the process of saving them. That's crazy. Temperature dropped to 20 degrees. I'm surprised that they didn't get frostbite. Prosecutors say Smith's behavior is clearly spiraling. They noted an interaction with Cottonwood Heights police about a month earlier in which he expressed suicidal idealizations. He had to be removed from Primary Children's Hospital for interfering with his son's care and tampering with the equipment on November 10th. He was also arrested for investigation of domestic violence shortly after the incident. I wish I could find it, but he was complaining about like carrying the child, like when they were talking on the phone. He was complaining about carrying the child and having to do it all himself because he was basically being divorced. And so people online were speculating that he was trying to kill the children so they didn't have to pay child support. Let's hear, when was this one posted? 26th. Yeah, we can go into this. Comments. Sorry, we are not accepting new comments on this story, so that means that it already got so unhinged that KSL stopped commenting. Or rather, KSL locked the thread. In all my days, I can't imagine being taught how to give CPR to my brother as a child. Completely reckless. Wow, right? Yeah, 3 small children being forced up a hard-rated trail they had no business being on with one adult who was, yeah, that is also super crazy. I would never take kids on a trail like that. No way, especially if they'd never been on a hike before. So you hear these people are arguing about whether child torture is appropriate. I don't know if you've seen the view at the top of it. I have thought in the past few months, like, hey, maybe next year, going hiking would be fun. I think they would like that. And, I know that Asher and Ethan wouldn't be able to get very far. But that's okay. We can just go hike for 10 minutes and then 10 minutes back and be fine, right? Now I'm like, nah, you know what? Let's not hike. Not until they're teenagers. Someday I would like to go and hike Angel's Landing. Actually, you know what? I've heard that little kids will hike Angel's Landing. Everybody says it's the scariest hike ever. And then other people will be like, nah, I've seen 5-year-olds go up that trail. No way I would let my 5-year-old up Angel's Landing. No way. No way. If the father doesn't have the common sense to know that a 2-year-old isn't fit for climbing a mountain, he was 2? Oh my God. Thinking about that just makes me feel sick. Mental illness is what happened? Well, maybe. I bet you that the mother is in singles groups right now or whatever. If I was still single, I would maybe know this person and be hearing the insights. That would be interesting to hear about. I've literally never seen a mountain in real life. I live in the second flattest state. When I was a missionary, I was in Kansas City, essentially. So it was flat. So bicycling should be easy, right? But for some reason, I was always in some of the most mountainous areas. From the very beginning. Manhattan has got some gnarly hills. Manhattan, Kansas. And then what's the other place? St. Joseph? Had some hills. There was another place that was really hilly, but I don't remember where it was. Biking uphill is brutal, yeah. Even if it's a slight incline, it sucks. But you know what's worse is walking. Ooh. So in the winter, our bikes got stolen. And so for about a month before we were able to get new bikes, we had to walk everywhere. And it was in one of those time periods where, it was ice storms. So obviously we wouldn't walk when it was slippery out, but it was just really cold. You had to have thermals on. And something that would normally be a 10-minute bike ride somewhere, it was hours. Walking for hours sucked. I was going to ask my wife if she had heard people talking about this, but I forgot to ask her. Yeah, I just love 600. I'm really not impressed. I'm seriously Like, if you think, oh, Seth will be really impressed, so I tell him I've made money on I'm not. I'm sitting here thinking like, this guy is a real idiot. Like, hey, by the way, even he did make new highs there. Okay, then why are you telling me? Ugh. You know, in retrospect, if you had gone short in the treasuries, it's been a pretty steady trend down so far today. And the amount of selling that we're seeing is a little bit suspicious for Black Friday. I'm just saying. Wonder if maybe Japan is doing something. Two, 4, and 8. I just can't. Do treasuries usually inverse the index? So the correlation changes, but yes, they're usually inverse. Depends on the situation, right? If the market is moving because they think that the Federal Reserve is going to be tighter or easier, then they tend to be correlated. Right, like if they think that the Fed is going to ease rates or whatever, then you see ZN go up and ES go up. Or if they're being hawkish, then they both go down. But on the other hand, if it's like equity markets are in trouble, there's some sort of a financial crisis, then you see equities go down and treasuries go up. And that's when those are the best treasury trades. Those are like, you just get long and hang on, and it just keeps going and going and going, a smooth trend where it doesn't even come back a tick on you. And all of these traders in ES are blowing their accounts. It's always, you know, one of the things I find funny is that like retail traders tend to blow their accounts all at the same time. Like, you'll have a day in the markets that's just like particularly brutal, and then you get on Reddit, and then the next day, and they're all telling their sad stories. It's usually low volume, slow days where I blow. Yeah. Well, it's definitely been on tight days where some of my worst trading was, and it took a long time for me to realize when they were coming and how to avoid them. It does seem, by the way, like that liquidity in the treasuries have recovered for the most part, by the way. Let's read this. Let's acknowledge corruption and kickbacks in IT management. It's everywhere. I spent over 25 years in global IT, living and working in a dozen countries across 3 continents. Despite all the talk of ethics and codes of conduct, corruption runs deep in IT. From C-suite kickbacks on mega contracts to freebies for devs. A few months back, an internal audit flagged a conflict. The e-commerce vendor for our marketing team was owned by the e-commerce director's husband. We scrambled to switch vendors and migrate services overnight. In another case, the country IT head got fired after auditors discovered his wife was a key partner in the firm building our new data center. Well, yeah, that's... You know what, though, that like for some things they're big enough, there's going to be some connection, but that one is probably suspiciously large. I don't know. It's kind of hard because I feel like that the relationships between people do matter. And I would rather do business with people that I know, but I don't know where that line is, you know? These do sound like situations where with companies that it would not be allowed. How it plays out at every level, top brass execs skim a small printed percentage from huge outsourcing deals with ISVs and preferred partners. Kickbacks may hit spouse accounts as consulting fees or come as all expenses paid Vegas, Hawaii retreats, plus holiday hampers and gift cards. Middle management, VPs, directors, they steer SOWs and contracts to preferred vendors. Think brother-in-law's startup for their cut. Lower levels, free conference passes with airfare, swag, shuffled goodie bags, vendor open bars, and hackathon gift cards or routine appreciation. Well, yeah, what's wrong with that? Okay. Is that corruption? I spent years at a big vendor. We literally had a relationship budget that was just thinly hidden bribe money stapled to golf trips and conferences. Everybody knew, nobody cared, as long as Q4 numbers looked okay. I wonder, you know, companies that do, so the one of the companies I was working for, they had a lot of contractors, and I always kind of thought it was weird that how much they relied on contractors. And I never saw anything that said that there was something going on, but I always kind of wondered. I was like, why would you do that? Maybe because it's more expensive in you know, well, I guess a full-time employee can be expensive, but geez, it makes me wonder if they're getting that kickback somehow. The most problem would be SOWs filled out blank for contractors with reasoning being urgent need of skills / expertise, and then renewed quarter after quarter, year after year with zero accountability as long as the right people like them, regardless of work getting done. What is SOWs? Statement of work? Statement of work, yep. We recently got mandated that we must use this cloud auditing tool for every single project we have going forward that basically does nothing that AWS and Azure don't already do. Quickly found out that the CEO is a close personal friend to someone in the C-suite. Sadly, this feels like it's not that rare, and the worst part is I work for an organization that gets a lot of government funding. Oh yeah, that is. Oh, that's very interesting. Jan Leekman left Meta to build a company based on world models. This is the same guy who built CNN's Founded Fair, won the Turing Award, and had an unlimited research budget. He walked away because he believes the LLM path is the wrong path to artificial general intelligence. The core idea comes from the 2018 HA and Schmidhuber project World Models, where an agent learned a racing game by dreaming up the environment in its own internal simulation and then playing inside that simulation before playing the real game and dominating the leaderboard. Ah. I'm really interested in agent-based modeling, and that kind of sounds like that's not agent-based modeling, but maybe along the same lines, maybe it could be related sort of a thing, or combine them together at some point. Treasuries are just keep selling off here, man. Where are our rates to? Well, the 10-year liquidity is, it's probably because it's the last day of the contract. I might be able to switch over now to Z. I should just switch it because, you know, it's going to be ZO on Monday. So if I don't see much here, I will just leave it there anyways. Okay. Whenever I see something dumping, I try and wait for a lower high. I don't. You clearly haven't watched the Treasuries. I tell you how this works. Somebody has to sell 100,000 contracts, and he will keep selling it until he's done. And you might think, oh, it came up, and then there's a higher low or whatever, and it's done, and I can take a reversal. And then they'll slam it back down to the low again. Every freaking time. I think one of the big reasons, if I had focused almost entirely on equity index futures from the very beginning, I probably would be a completely different trader. And I maybe wouldn't have gotten into order flow, and I maybe wouldn't have been forced to get into some of these other things. And the reason that I was is because the treasuries are such an efficient instrument. Like, the E-mini will play along with you for a while. I've definitely seen people that have success with it for months or even a year or two at a time. It's very, very common. But the treasuries, they don't give you such illusions. If you're doing something wrong, they immediately let you know. And one of the ways that they do that is that when a trend starts in the treasuries, they are very difficult to stop. Like, you've got a move like this now. It's either take a short or don't take a trade. Traders who've been trading since the days. Okay, let's see their past 5-year track record then. Because I've never had somebody show me a 5-year track record retail trader on futures. And every time that I see somebody says, oh, there is, and then they show me, and what is it? It's a swing trader or they're trading stocks. Just saying. Yeah, but where's the 5 years? That's cool. 2 million, and I've heard of millions in payouts. 2 millions sounds a little suspicious. But again, I don't care unless it's 5 years. I want to see like 5 years of statements, trades in all 5 of those years. Ideally, profit at the end of each of those 5 years. Well, okay, so tell me this. If you make 2 million 1 year and then you lose 2 million the next year, are you a profitable trader? Just saying. Now, here's another one. If you make 2 million 1 year and then the next year you lose 1 million, and then the next year after that you lose 100,000, and you lose 100,000, and you lose 100,000. So you have 200,000 left at the end of that. Are you a profitable trader? I mean, technically yes, but I'm not going to try trading your strategy now, am I? Like, what it ultimately comes down to is people want you to trade the way that they do. For some reason, it's like a virus. It wants to reproduce. I mean, I want people to understand the market. I don't want people to trade exactly the same way that I do, because that's just competition for me, right? But I want people to understand it so that there's more people to collaborate with, and so that we can maybe change some of the things about the market that I don't like. Okay? But this thing where it's like, all on Reddit, oh, I had success doing this. I had success doing this. And then especially it turns really quickly into buy my course. I'm not interested. Not unless you have 5-year statement. I'm not going to waste my time. If I went and I tried every strategy out there that people claim is profitable, it would be the rest of your life. I would spend all of my time back testing and probably never have any success with any of those strategies, right? So how do I decide where to put my time and energy, right? There has to be some sort of like standard, some sort of bar that you have to cross that says, okay, maybe now this is worth taking a look at. And where I place the bar is 5 consecutive years of profitable returns from scalping. And if it's not that, then I really, really doubt that it's worth my time. Al Brooks is not a salesman. If you say so, man. Mac is not a sales. Oh, okay. Okay. IMO, I can usually tell someone is full of BS if they're acting like a salesman. Did you know that there are studies that basically show that if you believe that, you're easier to fool? Yeah. Like they would ask people, are you good at telling when people are trying to deceive you? And they'll say, oh yeah, I can really tell when somebody's off. And then they would put them in a situation with the person that was lying to them, and the people that said that they were really good at detecting it were the worst at detecting it. See, is a whole thing. The very nature of the thing that we're dealing with here is one that we can't tell. You can't tell just from a description of a strategy that the strategy works or not. You cannot tell just from talking to a trader whether they're actually been profitable or if they're BSing with you. You have to have proof. And there are some people that are like, oh, only talk to people that have like verified track records and everything. But I say, if it's not 5 years, so if I want to start a commodities trading pool, I have to show the past 5 years of performance, or if it's less than 5 years, all of the history that I do have. So that's the standard that the CFTC has set for professionals managing other people's money, what they have to report to people for their performance when they're marketing. 5 years. They picked that 5 years for a reason. Yeah. Now, it looks like, by the way, that there was enough volume at that 11 to create a liquidity hole, and the decline in the treasuries have us paused for now. So, in this situation, if I had been short, which there's no way I would be, but, a different day and whatnot, I would probably be taking my profits there at 11. That does not mean that it's not going to go lower. Part of it is that we've got like 15 minutes left. So I see that coming up. Chances of us being significantly far away from 11 in the next 15 minutes is very, very low. Yeah, that's where I try to scalp out, and now you just put your limit order at 11. Don't. Because if you try and put it at 10 half, you might not get filled. Well, you would have gotten filled a minute ago, but if you put it on there now, you have a much lower chance of getting filled at 10 half than you do at 11. You might sit with an order at 10 half for 45 minutes and not get filled. And I definitely know what that one is like. There's an interesting thread in r/trading where this person's talking about simulating an entire exchange from scratch in a program, and it sounds super interesting. But he said, well, when I did that, all of the limit orders disappear. Yeah. The queue is probably crazy on Treasury, makes front running better. Okay. You want to know that they're going to be that a trend like that is coming, and get in before it starts and ride it. Yep. But it does look like that slip from like 12 half to 11 was like too much. Oh, hey, look, you actually would have gotten filled at 10 half. Hmm? But I'd be super careful. Like, I'm going to buy it at 10 and take it off at 11 half. Those. Actually, it kind of looks like they might. So something that will happen at the end of a move is they'll find a spot like that and they'll let it go for just a little bit and then have another little push. And when that happens, they usually balance back out to the 11. It's either that or it really turns into one of those. Well, like at that point, it turns into the unhinged market. It's like if it doesn't recover after that, then it becomes the unhinged market. It's likely to come back to the 11 and then start going back and forth at 11 again. R/layoffs, hired after 6 months of searching, fired after 1 week. I got hired at a small startup after 6 months of job searching. 1 weekend after working on a single issue, the manager ended the contract. The message was basically, we need someone who can deliver at a faster pace and be fully independent right now. What makes it frustrating is the repo has 100 plus issues dating back to 2023. No onboarding, no documentation, no structure. Yet they expect to jump in and perform like someone who's been there for months. That's rough, man. You're on ZNZ. Yeah, you don't want to be in ZNZ anymore. You want to be on ZNH26. In fact, I would be surprised that even the prop firms would... Well, most of the prop firms don't let you trade on treasuries anyways. But I would be surprised if your broker would let you submit to Z now, because like it's past first call. Like you could be assigned. You could be assigned for delivery. Unlikely, but it's possible. So they don't allow it. They don't allow you to hold a position. Make you move to March. I'm not trying to take it personally, but it hit hard. Anyone been through something similar? How did you bounce back? Dude, that company is crazy that that it was a week. It's probably not you small businesses like that have unrealistic expectations. Yeah. Sounds like incompetence, honestly. Like they're a startup, but they've been around for 2 years. Come on. $11:01. What are you talking about? 11. Oh, so you must mean Eastern time, huh? At 8:11. Okay. You'd already missed 60% of the move. It would have worked this one. It totally would have worked this one. I would just say, having a trend like this, where it trends and it moves like what? We started, let's say, at the top of the hour. So it's been trending down for almost 2 hours now. Unusual, honestly. And maybe something that would only happen on you know, a half day sort of a thing, right? Because what usually will happen to you is as soon as you can tell that there's a trend down, it'll stop, essentially. In the treasuries, it doesn't necessarily come back, but it'll stop, right? Like if you did that with this one, right? You get in here. Essentially, yeah, that's actually exactly where it was. And then like you'd be stuck in this forever. You'd be stuck in this forever. And then it was lucky you got this, and then maybe you're still waiting. But I would have gotten out here. I would have gotten out here. If I can make arrows. Oh, I can use this arrow thing. Yeah, I would have gotten out here. You see, it's just like this right here in the volume, right? You get all of the volume comes out at once, and that's when everybody goes like, oh, actually, it is a trend short. And then when you try and get in, that's exactly when it starts to stump. Now coming back over here, something interesting is happening because we've got an 8K iceberg on the offer. I don't know, guys. This is not stopping. It might just, it might be that because of the low liquidity, somebody really, but oh man, why would somebody that big have waited until Friday to do this? This is incredibly sus, to be honest. So you'd take a second entry. I don't feel like you're listening to what I'm saying, man. Where was we get in the second entry there, I guess? But at this point, like, what really would have made you think that it was a trend, right? Okay, so we're down here, it's a trend. Okay, I wait for the second inch. Oh, no, didn't get that one. Oh, no, didn't get that one. Oh, no second entry there. If you had taken if you're trying to take a trend train, oh man. If you think that 2 ticks down is a good enough for a trend, a momentum trade, whatever you want to call it, okay, especially, you know what, like, I did notice here, in fact, I even think I remember saying something that we were at the low end of the range here at this point, right? Well, what did I say? Well, it's, given today, it's noise. No way. I definitely did not anticipate or expect that big of a trend. Two ticks is nothing. Like, you're not even until you get to 4 ticks is where you're like outside of the noise. But and I guess I took a 2 tick winner the other day, so. By the way, they got through those icebergs. I still think they're going to come back to 11. It's actually the delta. Actually, that's really weird. What's with this? Very unusual. Very, very unusual. It could keep going, but it's just dangerous to shorter by something like this. I would short if it does pull back, though. Hey, try it. You try doing that for a month and tell me how it goes, okay? On ZN, especially. Or you could trust somebody that's been trading this since 2017 every day. It's different. ZN's different with those sorts of things. If you think that you're going to get a second entry for a trend down, it won't give it to you. If you think that it's about, it's like doing its reversal pattern and now it's going to come back up, it'll keep going. You think that the trend is really, really strong down to the downside, as soon as you enter into it, that's exactly where it'll flip around. The treasuries are so statistically efficient. Like, the market is statistically efficient overall, but for some reason, the treasuries are particularly so. And you also, because it's so thick, what seems like a great trend and you make tons of money over it in the equity indexes, over here in the treasuries means nothing. So in the end, that doesn't work. How much is the margin on a contract? So, generally speaking, you want to trade one ZN, it's $500 per intraday margin. And for like the full maintenance margin, I think is $2,500. If you're gonna like hold it overnight or something. But again, most of the prop firms ban treasuries. They might still give you the data, but I don't think you can trade them. Yeah, so it's about the same as one E-mini, yeah. I should note, by the way, on this downtrend that we got a really big steepener with it, too. Like, the 30 years is getting absolutely crushed. Oh yeah, it rejected my order. Yeah, because people found that they could cheat the queue on the simulator, and for treasuries, that's enough that if you do it consistently enough, you could pass a combine from just that. So they decided to just ban all treasuries altogether. Because nobody was really passing combines with treasuries anyways. There's not enough leverage on them. But you might still be able to place sim trades with it, right? Well, I'll tell you what, they did get back to the 10, or it was 11, wasn't it? The point of control is no longer 11, it's 10. But they kind of blew through it a little bit faster than I would have thought. You know, look at VWAP. I mean, it's on there. I don't care about it too much anymore, to be honest with you. Let's see. You know, it would be kind of funny if it like completely retraced this, right? I think that would be unexpected, because usually treasuries very much prefer to do this. It's like most days look like that. There's a big move at the beginning of the session, and then it just kind of finds a spot and it does its thing. The other day, was it Wednesday that we had this, where it goes like this and it went and then right back? Extremely unusual. Like maybe 10% of days, 5% of days. And no new low. Yeah, no. It'll just. I'm sure we could probably find some examples here. If we pull out this chart, you know, so like especially these days where like there was a big move up, you know. So like, look at this one. So this day was a weird day. I remember this day because like they moved up. The news was something that really pushed it up. I think it was like a key economic indicator they were getting. It was like a PMI report was really bad or something like that. So it's like that should be a reason to buy. And then some big meta order came in and sold it, right? And what happens is when the meta order is done, like how do you get this? It's going down so hard, and then it just goes flat. Yeah. It'll go down, and it'll go flat. Here, you can kind of see it. This day's maybe not really count. This day they made a higher high later in the day. I actually have to go back a little bit further because a lot of this action has been over the past like week or two has been really choppy. But like this one right here, see that big move, and then so that square root law. You see that? That's the square root law. First, it appears linear, and then eventually you find that there's an upper limit. You see that a lot. It actually, there's a thing where it's like, okay, when the meta order ends, there tends to be a short-term mean reversion period that is about 2.5 times the length of this. So if this is x, and this is 2.5x. Right. And then if there's another leg, it'll go again. Okay. But in treasuries, this thing right here, this kind of tail, often you can't really see it from the chart because it's only like one tick. So what we will tend to do is I want to know that the move is coming before it comes. It looks like this one was news. Yeah, because that you probably can't see the line, but there's a dark blue line right there. So that one was because of news. Okay, here's a better example though. Hey, there was a piece of news. It went down. Maybe we look at our flows and we say it's long, right? So I want to be in somewhere way down in here. Like way early before there's any real signs of momentum on the chart. But maybe I can see it in the flows, right? And then in this case, I'm probably would have gotten out in here because of time. But I'm waiting for these liquidity holes, which is kind of more like right there. Okay, here again, you see? And it just goes flat. Or like, do you think of it from like Mind Over Markets, whatever the name of that guy is, like volume profile kind of perspective? They say there is measured move, there is reversal, and there is trend day. And Treasury does this measured move sort of thing a lot. Like a true trend day, maybe once a quarter. Like, in fact, if we come back here and we look at it like this, like, I guess you can call this one a trend day. I guess you can call this one a trend day. Because it was moving down all the way to the close. But it's super, super common for it to just... Okay, so this is the day that I was talking about. This one right here. Unusual. Doesn't do that very often. I guess this one is kind of similar, but this one was, I think this one was an auction. That's the reason why that one came back. Oh, look, there's another one. No, this one's not quite the same. This is like there was news and then they reversed after the news. That date, the 26th, that one was like, it just did it on its own. Or not the 26th. Yeah, no, it's the 26th or the 25th. But you'll also get a lot of days that are just tight. You know, like this. It's tight. And the thing is that a lot of these really big ones, like that all happened during news, so kind of hard to even catch anything. Here's a move with a good flag on it. There's a move with a good flag on it. Yeah, that's as far back as we go. It also does, when you look at it on a daily chart, it's very different from equities, right? Have you tried a tick chart? I use rain charts sometimes in the treasuries, but I don't really bother with that stuff anymore. Like, honestly, I have charts up because I have my quantitative stuff. By the way, something weird is going on here with my market order imbalance. I don't know what that's about. Should look into that. How's that happening? Anyways, maybe I'll look into that later. But these are mostly like because I have my indicators and I'm doing quant stuff, right? I'll remember where we were and everything, and I'll use the charts to kind of describe the action to you. But my eyes are over here on the DOM if I'm actually trading. Anyways, I've gone over. So, and I can hear the girls talking, so I think I should end the stream. I'll talk to you guys on Monday. In the meantime, stay